Yes, this session is for people pursuing careers in investment banking. But however, I'm happy to talk about associate and VP positions, which it sounds like you're probably uh, more likely to transition into. But for the sake of the majority of the people here, I'll probably stick to topics related to analyst recruiting. But I'm happy to address your question in a little bit. Okay, so I think it's worth starting at this point. We have a good bit of momentum. So I'll keep my intro short and then we can focus on investment banking topics, which you guys are probably more interested in. But I'm Joey Astolfi. I did my undergrad at the University of Georgia. I grew up in Atlanta after my parents moved to the US from Argentina. I did investment banking for 2 years at Moelis before spending 3 years on the investment team at American Securities, which is an industrials-based traditional buyout fund, before recently joining Harvard to get my graduate degree. And I will be rejoining the PE industry after I receive my graduate degree. On campus, like many of you, I was involved in several finance organizations. So UGA has a flagship investment banking program called Corsair and a student managed investment fund. So I recognize many of the organizations you guys are probably in, and I led many of them, which is what got me interested in coaching. So again, the genesis of this 45 minutes is I'm here to answer, like a traditional office hours, any questions you guys have about recruiting generally. It could be investment banking, it could be private equity. So I'm probably going to tick through most of the questions in the chat as they come through. And as a reminder, please introduce yourselves and send any questions in the chat. And if I don't have a general questions to go through, I will go through my framework of how to prepare for investment banking interviews. I'm starting to see a few. Maybe I'll just quickly address Neil's point because he was in here pretty early and asked a question. So Neil has a degree in finance. He didn't participate in many of the student funds on campus. Specifically equity research, what should he do in the next 6 months to best position? Look, as I think about what investment banking firms look for in a competitive resume, or equity research, which I think is also relevant, is one, a personal interest in the field of finance. And so you mentioned you didn't join many of the clubs, but it's never too late. I would think about, are there online financial certification courses you can do to further your finance knowledge and add to your resume? And are there any part-time, even wealth management or finance roles that you could do locally to, again, build up your track record? Because again, I think when you're recruiting for investment banking, the resume, you should think about a few things. You want to show associates, VPs, directors at these firms that are hiring you that, one, you have a passion and interest in finance, which you should show through your GPA if possible, that you've tried hard in school, and organizations on campus, on or off campus, that have furthered your knowledge in the industry. And then separately, they'd like to show that you have some sort of professional experience. And so it doesn't necessarily need to be finance or investment banking. Obviously, the further away you get from that, the less relatable your experience is. But at the same time, if I'm reviewing your resume and someone has spent each summer of their undergraduate degree working in some professional field, to me, that's someone who knows how to behave themselves in a professional setting and is committed to working hard. And so I would think about what can you do on and off campus to build your resume. And separately, are there any local part-time roles that may not be as attractive as what you want to do in equity research, but that you can do in the meantime to beef up your resume? Separately, I would just download a list of every single bank that you have. I have a bank list. If you send me a personal inbox message, I can send you that, and I would start from there, and I would just apply to as many as you can. Scott, I'll come back to you towards the end. I'm sorry, I know you had a question. If you want, inbox me, and I can address yours specifically, since it's probably less relevant to the majority of the people in the chat, and I want to try to use their time most efficiently. So Sebastian has a question about getting beta for private company when calculating cost of equity. So for those, to give a little bit of context, most of this is relevant when you're calculating a discount rate. So whenever you're doing a DCF, which is an intrinsic way to value a company, you're valuing a company based on a set of forecasted cash flows. So as you forecast cash flows, you need to come up with the value of the business today. So you essentially need to discount those cash flows to a period today. And so when you have a private when you're dealing with public companies, you can often just go to Bloomberg and you can see a company's beta, which beta, for those who don't know, is a company's correlation with the broader market. And so it's a measure of correlation, which means if the S&P is up, call it 10%, if your beta is 2, then the stock's equity value on average share price should be up, call it 20%. So if you were to have a public company, you could go on Bloomberg and you could very easily find the company's historical beta. When you're dealing with a private company, it doesn't have a share price, it doesn't trade on a public exchange, you can't go to Bloomberg to get beta. So what most people in the industry will do is they will find the closest set of comparable companies or the industry that it's in, and they will find public companies and they will calculate the beta of all of those public peer sets, and they will take an average. And then there's a process of unlevering and relevering beta, which is basically to say beta for any company is based on equity value, which takes into account leverage, which is debt. So, and again, in a more simplistic sense, the more debt you have, the more risky, the more volatile a company's performance can be. So you would take the beta of a public comp set and then you would unlever it, which is to say you remove the impacts of the different capital structures of these businesses, and then you would re-lever it for your company's individual capital structure. So this is a fairly niche and technical concept. So I'm going to try to leave that one there, so I don't hopefully not bore a bunch of people with some niche things. But Sebastian, if you want to talk more about that, feel free to inbox me. That would probably be my 30 seconds on beta for private companies. And by the way, if anyone wants to join on video and ask a question live, at any point, turn on your video and I'm happy to take your question directly. You can jump to the beginning of the queue if that's of interest to anyone. Juan has a question about, let me just see the list here. Okay. Juan, I'm going to take yours relatively quickly because it's specific and I want to address questions that will be most applicable to the majority of the group. So if you feel like I haven't addressed your question after this, just inbox me and we can chat separately. So you graduated last month with your MBA. You have 2-3 years of finance experience, commercial banking, business development. You're looking for full-time analyst, intern IB positions in Denver. I totally feel where you're coming from, especially when you're in what I'll call satellite markets, which aren't the primary ones. Again, I don't know how you're networking, but what I would do is take a list of banks, look up every single one that has a presence in Denver, and then go on LinkedIn and just type in Denver and the name of the bank, and it'll spit out a list of everyone who works in the region. This is how I did my networking when I was in banking or when I was recruiting for banking. LinkedIn is an incredible resource. And so if you start from that, I would just try to get through as many people, or just in essence, for every bank you're interested in, I would try to have a conversation with 1 or 2 people from that bank to try to make a connection and establish a relationship. If you're struggling, you can try alternative markets. And one thing you could do is look up people that have similar backgrounds from you, but might be in different regions, and use that as a way to make a connection with the bank that you can then try to get them to connect you with people in Denver, which is what you're looking for. So I'm not sure if that's exactly what you're looking for, but it's pretty specific. So we'll table it for a separate time. I know, Matt.
Can I ask a question?
Yeah, go ahead.
Awesome. I got 2 quick ones for you.
Sure.
As somebody who's probably interviewed candidates in your previous roles, what would you say are like the top traits that you find in candidates who actually advance to the next rounds and inevitably get the job?
Sure. Great question. Um, One, I think it's like attention to detail and a track record via your resume. So once you get to that position, like there's a ton of people with similar backgrounds that have done finance organizations, have done internships. Um, so one, I think it's a true understanding of what the role is, and the best way to do that is to try to network with people. And so, as opposed to giving like a general answer about banking, if you were interviewing at Moelis, Matthew, I mean, I would see, the highest performing candidates were people who would in the middle of the interview be like, "Hey, I'm very interested in Moelis. I know it's an independent, it's a boutique bank. These are the reasons I think it's a good fit for me. I've spoken to, Brian, Jim, whatever. These are the things that resonated with me the most." And so I think the strongest candidates are the ones that piece together, the behavioral, technical, and networking side, because at the end of the day, everyone who gets a job at one of these banks has the table stakes technical aspects down. So I don't think that there's like a world where you over wow someone with technical capabilities. Like that should be table stakes for a lot of these firms. I think once you have that down and you can connect, your true interest in finance or a specific bank with conversations you've had with people at those firms, I think that's when you really start to resonate with the interviewer. But general traits, attention to detail, a track record of working hard via GPA, clubs on campus, and internships are probably the best thing you can do to get in the door.
Solid. No, that's awesome. So give like for example and whatnot. Great. Solid. Thanks.
Sure. Um, I see someone else on video. Did you want to? I can't see your name. Is it Rohan?
Yes, I had a question. Sorry, I thought the person before me said he had two, which is why I was waiting. But I am a freshman in college this year. I'm a little bit earlier than most. And I've been doing a ton of outreach to people. I've been messaging on LinkedIn, sending emails through my alumni database through my college, trying to find something to do this summer. Is it important to have something on my resume for my freshman summer, or is that not? And if it is important, where should I be looking?
I think it is important. I don't think it needs to be something directly in finance. Like the reality is, as you go down from junior to sophomore to freshman, like the amount of banks that have freshman and sophomore programs, it's so slim and they're so ultra competitive. I think when we're in the seat of evaluating candidates' resumes, I think we want to see that they've had productive summers. Obviously, as you become a sophomore and junior, like you're more capable of getting better internships. So comparisons can be made there. But as a freshman, a lot of it's dependent on where you are. Like if you're in non-finance like regions, then it's harder to get some of these, like, for example, people in New York and the Northeast often you'll see do internships at small PE funds that they have networks or relationships with. That's not the expectation. My recommendation would just to be more flexible with what you're interested in. I think any type of professional experience is great. And so my thought process was, let me start with investment banking and then commercial bank and then corporate banking and then commercial banking. And then once I got past that, I pretty much had emailed everyone in like the Athens and Atlanta region, which I thought had like a small PE fund, small asset management firm, just to see if they were interested in having like an intern for the summer. And so you kind of need to create your own destiny, because the reality is not a lot of people are looking for freshman interns. So my suggestion would be, don't limit yourself to banking and banking type of jobs. You can do anything. And separately, if you feel like you're really struggling, there are other ways you can show that you've had a productive summer, like study abroads. So for me, I struggled finding a freshman internship, and so I ended up studying abroad in Oxford. And for me, I found that to be beneficial in the sense that I progressed my major, and I was able to end up double majoring in computer science and finance instead of just finance. And even in my HBS interview this past year, it ended up actually being a significant portion of my interview by chance. So Again, I don't think you need to do a banking role and you don't need to hold yourself to those standards, but you should try to find any job that gives you professional experience. And if not, consider study abroads or other things to kind of progress your career.
Thank you.
Of course. All right, we've got one more on video. Sebastian.
Hey, Joseph. How's it going? I have a quick question. I have a super day next week for a sophomore internship. And I
Yeah.
was wondering what would be your best advice? I've been getting some advice saying like it's going to be mostly behavioral, but if it's mostly behavioral, uh, what do you think is the best way to talk about my story and to not sounds like I'm scripted or you know, I just what would be the best way to just approach a sophomore super day?
Sure. No, great question. I think given the limited amount of time you have, I think focusing on behaviorals and why you want to do this program, why you're passionate about the bank, why you're passionate about finance is probably your best priority. And so if I were to, tell you how to focus your time, like make sure you have strong answers for when someone asks you for your background, your story, why banking, why that particular bank. And so those are the three primary questions. When you think about your story, I think you just need to sort of communicate it from the perspective of, this is my background. These are the things this is why I was interested in finance. These are the things I've done over the past 2 years as a sophomore to further my knowledge in finance. And this is why I'm here today, hoping to further it with your program. I would also just think about like the three most relevant stories from your background, whether it be college or before that demonstrate some form of like leadership or analytical capacity, whether that was like a case competition you did or a project you did. Just have 2 to 3 stories back of mind that you can sort of use in a sense of if you're asked any type of question from like, tell me a time you were a leader, tell me about, the most important thing you've accomplished. Just have a couple things back pocket that you'd be open to talking about if they were to ask. I actually, unless they told you it was purely behavioral, I would spend a little bit of time just making sure you know like what a DCF is, precedent transactions, relative valuation, which are comps, and some high level accounting, because often those can be used to weed out candidates. But if you wanted to do like a mock interview specifically for this, I'd be happy to help you. So just maybe inbox me directly after this and we can chat more. But congratulations on the Super Day. Those programs are very hard to get. So I'm hoping best of luck if we don't spend more time chatting.
Thank you. I will just send you a inbox for sure.
Cool. Great, Sebastian. Great.
Thank you.
So I see you, Jillian. Let me take one from the chat because it's been a while, and then I'll come back to you. So I think Harish has a pretty good broad one that is helpful. If you have little to no experience, where can I start to learn technical knowledge, commercial awareness regarding IB? The way I would think about the technical interview for banking, it has like really 4 to 5 components. You have the accounting aspect, which if you aren't in a business undergrad, which has a financial accounting class, that's usually the easiest way. But when you think about accounting, I think you just need to make sure you understand what the 3 financial statements are, how they interact. And then there's this type of question called like single step or multi-step accounting questions, which are basically asking, if something happens, like if you have, if you buy inventory or you make a sale on credit, how does that impact the 3 statements? These are all just questions that they're taking individual line items on the income statement or the balance sheet, and they're trying to test if you have an understanding of what these line items fundamentally are and how they impact the rest of the financial statements. And so on the information side of things, like I think at this point, you can probably find free breaking into Wall Street guides on the internet. they have a pretty comprehensive way of covering this. If not, YouTube is also a very good resource. All of the companies that sell you financial accounting prep guides have YouTube channels that basically cover all the guides in videos. And so I would think about it like this. You have accounting, you have valuation, which is DCF, precedents, and comms. And then you have more advanced topics like LBO and accretion dilution and restructuring. If I was preparing for investment banking in your shoes, I would not go into an interview without having a pretty good understanding of the fundamentals, which I would say are accounting and valuation, DCF, precedent, comps. And in between those, there's like another module which is called just like enterprise value versus equity value. That is like the building blocks of all fundamentals. And so I think very important to understand those concepts before an interview. So again, YouTube is a helpful resource. There's asimplemodel.com and Breaking Into Wall Street Guides, which I'm sure you can find on the internet. That's a good starting point. And so I'll take Jillian, but maybe before I take her, I'll just give you a quick plug on how I generally work with people if coaching is remotely interesting to anybody. I taught a full kind of course for undergraduates while I was a senior at UGA to place in banking. So one of the things that a lot of people work with me by saying, hey, I have an interview in a week. I would like to do a mock interview, and I will only do a mock interview for them and give them feedback. And that's very helpful to them. Other people are like, hey, I don't know where to start. Can you walk me through start to finish through a finance kind of accelerator? And I will go through all these topics. And the way I structure my training is I start with a mock interview that has easy to hard questions for every single kind of interview topic. And it gives me a baseline of where I think you are and where you need to be successful in interviews. And then I will work with you to tailor your coaching. So if that's at all helpful, feel free to reach out. You can scan that QR code and I can work with you. So Jillian, if you're still on, I'm happy to take your question, or I can move on to Carmel.
Just super fast. I think when looking at technicals and studying the technicals from the various sites that you mentioned, do you think there is a really stark contrast between, like right now, like I have work experience, so I would be looking to lateral as an associate. Do you think they would aim towards like more behavioral questions for an associate based on previous work experience, or do you think the bar is pretty equal in terms of the technicals?
Yeah, I think it's a higher bar for sure.
Right.
I think everything that I just covered is like table stakes.
Mm-hmm.
I would think your technicals will probably be more tested through your deal experience. And so if I was reviewing your resume and you were lateraling and you had worked on, one or two sell sides, I would try to test your finance knowledge through the sell side. So I would want to know if you were selling a business, how you structured the valuation, how you did it for that specific client. I would probably ask you about, the sell side model and how you structured that. Any challenges you ran into with buyers. So I think there is a higher bar. I think if you understand the fundamentals, I think you can get through it because there's such an information asymmetry when you're talking about your deals. Like you could pretty much tell me anything and I wouldn't know. But I think you would have a higher bar, and I think you would be pushed more on like experiential and situational questions to test if you would be a good manager for analysts, because associates have, significantly more responsibility than analysts. You kind of have to lead the creation of all the marketing materials and manage junior analysts. So I would expect slightly higher bar, but it's probably more dependent on your specific experience. And so if you were capital markets or restructuring or something, like I would be like, you should probably focus your time there. Or if you're interviewing into like a healthcare group, like I would spend some time thinking about like, what are the common things that banks do for those industries, like, payer mix, all this other stuff for healthcare specifically. So that would be my quick response. If you wanted to chat further about this, I'd be happy to do that one-on-one, but.
Sounds good. Thank you so much.
Of course. And so Carmel, I have like a line in my computer, so if I'm mispronouncing it or misreading it, I'm sorry. You're interning at an investment bank and you want to land a summer P internship. Great question. I think these are super hard to land. Given this, I would imply that you're like a summer sophomore intern and you're thinking about applying for a junior year P internship. If that's the case, I think you're in a great spot because of how limited the population of sophomore internships are and how credible your experience will be going into that process. So one, I think you're in a phenomenal place. Two, I think networking is like extremely important here because it's harder to get into these programs and the amount of PE funds that have analyst positions is very small. So you're going to have to work harder to find connections at these firms to get your name in the door. And in just full transparency, at all of these funds, especially the one I worked at, we sort of have a short list of people that we've spoken to and have interest in the position. And so you kind of want to get on that list and try to network people. So one is network with people. There's not that many funds that have these internships. So I honestly think it's like a handful of emails you need to send. And then two, if you're fortunate to get an interview, I think the bar is significantly higher from a technical perspective. And so one, that's LBOs. You have to fully understand the private equity business. You have to understand how to do an LBO. And I think you have to have a slightly better presence of the market and the industry and what's happening. So think about macro, what happened in 2021, where all the deals, like 1 million deals happened in 2021, inflation hit in 2022, interest rates rose, very challenging deal environment. And pretty much where are we at today with the Fed trying to find sort of soft landing. So again, I think you're in a great spot. You need to do a lot of networking. You need to make sure you're very sharp on LBOs, and you probably have to have a better sense of the market generally. If you want to chat further, again, feel free to inbox me and we can connect directly. There's like a free intro feature that we can chat for 15 minutes. And then if you're interested in coaching, we can go from there. All right, I'm going to take a quick glance at the questions here before. So Sebastian. So I'm sending my link in the chat. If you click on this, you can schedule a free intro or inbox me, and then we can chat about coaching. All right, I mean, a little bit further up. Ryan. All right, so Ryan is asking, if your goal is to work in middle market PE, would you be better suited working for a middle market or boutique investment bank? I honestly don't think it's that different. I think generally boutique, like elite boutique banks and bulge bracket banks generally place better than middle market banks. I will say there are groups that you can work in that will better position you for PE recruiting. So for example, at Moelis, part of the business model is essentially partnering with PE funds, because Ken Moelis, the founder of the bank, had this notion that PE funds are in the businesses of buying and selling businesses on a recurring basis. And so if we make good relationships with the Apollos of the world, we'll do a bunch of recurring business as an investment bank, which is historically a very transactional business. And so one of the things that I enjoyed about the bank is because of that, I got to work on a ton of sell side deals with PE firms. And it really gave me a good sense of the PE industry, what they look for, how they think about doing due diligence. And I honestly think it helped me out tremendously when I was talking about deals and what makes a good company as I interviewed for PE. And so, again, I think elite boutiques and bulge brackets, you probably have an equal good chance of placing. However, if you go to a bulge bracket bank and you place in, power and utilities, which is a very different type of business, or FIG, for example, financial services, which is almost all public, I think you're going to have to spend more time on your own understanding how traditional operating businesses work and how to think about investment thesis and risks than you would if you had just worked in an industrials, healthcare, consumer, technology group, just given that. So my advice would be go any route, preferably boutique or bulge bracket, and try to work in groups that have more traditional operating businesses and private equity presence if that's what you're interested in. All right, I see a bell on video, and I think Matthew raised his hand, so I'm happy to take either of you as a pause before I go on to the next question.
Hey, so I just had like a quick question about like the process for me as a freshman and kind of like what I want to do long term and where I should start now. It's kind of like a more general question. So I'm looking long term to do like more distressed PE, so like investing.
Yeah.
And I know there's like a route in investment banking, but I was also going to ask you for like any other recommendations. Should I shoot for like the buy side, and if so, like where should I be starting right now as a freshman at a semi-target?
Yeah, no, fair question. I don't think, your end goal in mind as distressed investing. I don't think is that different. The path you need to generally do, like you need to get good grades, you need to get involved on campus in the investment organizations, in your finance clubs to kind of build your resume and demonstrate passion for finance. I think once you get to your junior year roles and full-time analyst positions, I think that's where you can become a little bit more specific and targeted. And so if you want to do that, I think restructuring investment banking is probably a good thing to target. It's a more niche sector, but a lot of the groups that do that are extremely competitive from a placement perspective. And so like PJT Restructuring, Evercore, Moelis, Houlihan, these are all firms that have phenomenal restructuring practices, and I think would probably position you better for distressed investing roles post-analyst time. And so, again, I think you just need to get any professional work experience your freshman year summer, ideally in finance if possible. If not, do a study abroad, and then try to do that again sophomore year. And then if you are truly interested in that, I think you're actually very well positioned, because majority of people don't their sophomore year think, hey, I want to do distressed investing and therefore need to do restructuring. And so if you practice restructuring technicals, which is a subset of the market, I think you'd be very well positioned. So I'll leave it there. If you want to chat about that further, I'd be happy to talk to you like one-on-one via my profile, but feel free to ask a follow-up a little bit later once I get through a couple more questions.
Great, thank you.
Hassan, happy to hear your question.
Hi, Joseph. I hope all is well on your end. I do apologize for joining your office hours late.
Okay.
I'm grateful for this opportunity to meet you. I was wondering if I could describe, my personal situation, and I was wondering if I could get some insight onto that.
Yeah, sure.
So with regard to my personal situation, so I am a career pivoter. I was formerly in clinical research in the R&D field up until about last year, where I transitioned to a more program management role with a healthcare startup, and I transitioned to that role in about April 2024. Since then, I have actually enrolled in a Master's of Science in Finance program at Georgetown University. I'm doing the accelerated path as opposed to the traditional path, meaning that I will be graduating this May 2025 as opposed to May 2026. With that in mind, because it is accelerated, I don't have I've kind of self-limited my opportunities in terms of any like formal investment banking, summer analyst positions, things of that nature. So what I've tried to do is just leverage my background as much as possible, particularly with regard to healthcare coverage, to obtain opportunities in finance, because I've had no real kind of relevant experience. So, I'm thankful to say that I've I've actually garnered 2 positions right now. So I have since kind of stepped away from the program management position. And this spring semester, I'm actually working 2 private equity internships. One through Georgetown. I'm working with the Southeast Regional Center, specifically focusing on the EB5 initiative, which focuses on foreign investment and underwriting those kinds of deals. More so on that end, I'm doing a lot of deal origination and just kind of like accentuating the deal sourcing pipeline. And then on the other end, with the more formal private equity internship that I'm working, I'm just focusing on kind of private equity through and through. So deal origination, deal screening, and then, as those deals progress, I will take on further responsibility. And along those lines, I'm reading all kinds of literature with regard to the kind of private equity, um, realm, but then I'm also doing that Wall Street crash course on financial modeling. So my question for you is, because I have no real relevant, IB experience, and the kind of off-cycle recruiting, with this upcoming, or I guess the off-cycle recruiting is ongoing now. I guess we're towards the latter end. What kind of advice do you have in terms of recruitment for full-time investment banking opportunities, particularly because I understand that I've been phased out of the bulge bracket recruiting, a lot of the lower middle market and boutique recruiting.
Yeah. No, I appreciate the background. I will try to be brief, just given there's a few other questions I want to get through. But again, if you find my profile, we can do an intro and we can chat about it specifically. Look, I would say full-time recruiting and lateral opportunities is your best bet. I will say that is dependent heavily on the market, which I think is steadily improving. And so for context, when I transitioned from banking to PE in 2021, it was like a record year for deal activity. And so you saw a ton of lateral positions move up, and a ton of people went up market from middle market investment banks to bulge brackets and elite boutiques, whatever it may be. So part of it is a little bit of patience, just given the market environment. I think the banks just reported great earnings today. With the direction of rates coming down, I think deal activity is going to increase, and hopefully the lateral and full-time market will improve. What I think you can do in the meantime is come up with a list of banks that are most interesting to you, and start networking with people. My biggest advice for people when they do networking is, if you don't have to ask for a favor on your first networking call, you're just in much better position of power. And so if you can have conversations with people now and get them up to speed on what you're working on, how it's developing your interest and knowledge in the area, I think when those open positions come up, I think you'll be better positioned to access them. And you'll be able to follow up on a conversation you've already had, and it'll be much easier to ask for a favor. And so again, I don't know if you can come up with some sort of web scraper, if you have all of these banks and you can have something that's constantly scraping for new open opportunities. But I mean, that would be my suggestion. I think your experience is great. And I think there is definitely a position for you to have. I just think you have to be a little bit patient with the market environment and the way it is. But I think it should be improving, all things considered. If you want to chat about other things, or if that wasn't satisfactory, feel free to inbox me, and we can chat more about that. But best of luck with the masters. I think you're going to get great experience. I think it'll work out.
Thank you for your insight, Joseph. Thank you for your time.
Sure. So quickly, I told Matthew. And then I skipped a few, so I apologize. I'll come back to them. So why did I join Harvard? Yes, the opportunity cost is significant, not only in the cost of the university, but lost wages. For me, the business school came with a promotion. So I'm sponsored by the PE fund I worked at before. So they're paying for the cost of tuition. And when I come back post-graduation, I will be rejoining the firm as a VP on the investment team. So for me, this was affiliated with a promotion. I don't think that enough was relevant for me to go to school. I really liked the firm. I think for me, the more people I spoke about in the industry, it was more about creating a network in New York. As someone from the Southeast, there's not too many people from the University of Georgia who work in finance and specifically post banking careers. And so, I mean, even in my PE career, I was fascinated by the amount of people who, when we looked at a new deal or we were looking at a new industry, would just simply start off by saying, oh, hey, I have a really good friend from my business school degree who actually has a startup in that field or does coverage banking in that field. Let me reach out to them. And so when I think about what are the skills necessary to be successful as a partner at a PE fund, it's more about one, what's your investment acumen? But there's also a sales role, which is how do I go find companies that are interested in investing in, and how do I convince people that I'm the right person to invest behind their business? And so while it might not be insanely relevant for me today because I have a strong undergraduate finance degree, I think the long-term benefits for me outweighed the loss of incremental wages I would have made had I stayed in PE.
Is it typical for firms to push you to make that next jump to the degree?
Yeah, historically, this common trend of 2-2-2 has been a trend where you go to banking for 2 years, PE for 2 years, and then business school for 2 years, and then you go back. There are still some PE funds today, like Berkshire Partners, for context. When you join the firm as an associate, there is generally limited path to be promoted directly. Even if they like you, it's like come to business, go to business school, and then maybe come back. I think that's changed immensely. Part of that is because the PE industry is maturing. And so in order to keep the best talent, making people go do like a 2-year boondoggle in an MBA program and come back is less attractive for some people. And so now what you're seeing is a lot of firms are flexible with direct promotion programs or business school sponsorships, because if not, they'll go to startups, they'll go to tech, they'll go to other things that'll get paid more. So I would say historically it was like the benchmark, you had to go. I think that's very flexible now. It depends on sort of the path each individual wants and probably like their grounding and how sought after they are internally within the firm.
Cool. Thanks. Appreciate it.
Sure. All right. So I skipped a few. I can go on for like another 15 minutes till 3. So I'll just try to get through as many as I can. And if I don't, again, feel free to inbox me and we can do a free intro and talk about what you have going on. So the next one is Richard. Yeah, I mean, it's a fair question. I think the reality of the situation is if no bank wants to hear that you're using them as a stepping stool to some other career opportunity. And I'll give you a little bit of context. At Moelis, the culture is pretty much you come here and you're going to go on to do other things. And so I want to say of my class of 30, I think probably 2 to 3 people stayed on as associates. And so there was a very open culture about PE recruiting and helping analysts get the jobs they want to sort of incentivize them to do better work at the firm. At other firms, like bulge bracket firms like JPM, Citi, oftentimes my friends, when they would be recruiting, would have to sneak out. They'd have to use doctor appointments as excuses. And it's very frowned upon because the idea is they want retention. They want to keep you and you can be an associate. So, I mean, even if your long-term interests are pivoting to other fields as PE, I do think you need to craft a why banking story that makes them excited. The reality is, I don't think your why banking needs to say that you're going to work as a banker for eternity, right? Like, why do you join banking? It's because it's an amazing training platform. You get thrusted into responsibility levels, interactions with CFOs, CEOs as a 21-year-old that you wouldn't get in any other job starting out of college. And so there's a bunch of reasons that you could be excited about banking that are relevant to your future career in PE that don't implicate the fact that you're going to work in banking forever. And so my suggestion would be stay away from saying you're interested in PE in banking interviews and think about the aspects of banking that are actually interesting you to deal environment, high intensity transactions, sector knowledge, working closely in teams, high degrees of responsibility, traveling, whatever it may be. Stick to those things. save the PE stuff for your PE interview once you get your job in banking. So Anish has a question about where to start for technical prep for student orgs. I think it takes fairly long to get through the Wall Street Oasis guides. I mean, there's a difference between like how much time you dedicate to it and what you get out of it, like sort of what you put in, like garbage in, garbage out type concept. And so, I mean, I don't know your university or how difficult your, student orgs are to get into. But I would say if you glance through those guides as a freshman, I think you would be in a pretty good spot. I don't think that, I mean, if I thought back to when I was a freshman and what my knowledge level was then, I certainly wasn't an expert. But I think having a, baseline of like just seeing some of this information conceptually for the first time is very helpful. And I know freshman year is very fun, so it's hard to carve out time, but my suggestion would be to try to flip through at least the accounting and like valuation guide, which is like DCF precedents, and comps before your interviews. Again, happy to chat more separately if you feel stressed out about that. So Miguel has a question about, he's looking to lateral from project finance to another coverage group. Totally. I think you have the right mindset. Whenever I think about people laterally, specifically from a non-coverage group to coverage group, so a different product to a different product, and there's a world where knowledge gaps exist on technical aspects. I am sensitive to that. So, for example, like if you were in a sponsors group, that's not a great example. If you were in a debt capital markets group and you were interviewing for like a PE group, a general traditional buyout PE group, like those interviewers will probably press you more to make sure you understand how to model, how to build an operating model, how to do a DCF, how to do an LBO than other candidates, just because the perspective is, hey, this person has done a specific type of product for some time. We need to make sure that they can do the other characteristics. And so if I were you, I think the most important thing is networking. You want to build a relationship that's going to vouch for you. And so hopefully your project finance manager is supportive of your lateral and you can get them on your side and they can be an advocate for you. I think that's usually the best possible case. If everything went well, you would have a manager on your project finance team that supports you because you've done good work for him and he wants you to be happy and go on to another role. And they would either connect you with people in a coverage group or you would be able to find your own connections with another manager in a coverage group so that you would have your manager in project finance supporting you and you would have a manager in another coverage group that vouches for you and gets you the interview. And then I think what I spoke about earlier from the knowledge gap, that's where you need to spend time making sure you're prepared for the interview. So that would be my general advice. If you want to chat more, I'd be happy to do something one-off. All right, so I think I got through almost all of the questions. If anyone has anything else they want to ask, I'm happy to stay on until about 3 p.m. Otherwise, my channel is linked on the QR code there, and I'd be happy to spend more time talking to anyone. I'll give it like 20 seconds before I assume. All right, there we go. Harish, I don't think anything technically or behaviorally changes. I do think where there's questions about the deal environment and the market, those are probably less relevant for you. I mean, the US is a pretty relevant economy net globally, so some insight matters, but like there might be topics that are UK centric, that are more relevant, that would be different from at least the advice I would give someone in the US. But I would think generally everything behaviorally and technically probably holds. The job is very similar at the analyst level. So I don't think I would change my advice for anyone breaking into IB from a junior level outside of the fact that I don't know about the Treasury and Federal Reserve system of the UK and how economic and macro policy works there. All right, all right, Hassan, you're welcome to ask a follow up.
Sorry about that. I know you. You have a busy schedule. Just very briefly, I understood that you mentioned pursuing, graduate degree following your investment banking journey, and that some of the firms push for that. And I'm wondering, from my perspective, and a master's of science in finance is not necessarily an MBA, right? An MBA comes with years of experience, and it focuses on, a more broad kind of curriculum, which I understand that private equity firms and investment banking firms prefer. However, with this graduate degree as a Master of Science in Finance, do you foresee, the necessity to pursue, an MBA at some point in my life?
Fair question. I think that's predominantly a decision you'll have to make based on your goals. I don't think an MBA degree is a requisite for my career path if I want to be a partner at a PE fund. I did it because I had a unique opportunity where I was sponsored internally, and for my set of skill, as I thought about developing into the manager I wanted to be, I thought it was relevant for my subset of skills, and I wanted to meet new friends and build out my network in New York. So that was my personal thought process. I don't think it was a requisite. I may never see benefit that I expected from it. It may one day bring in a deal from one of my friends in business school, and I'll be forever in debt for the degree. I don't exactly know. I think for you personally, if I had a master's, I would probably think that's enough from the education side of things. So, and when you think about like not working and lost earnings, like it depends on like the type of life you're trying to live and your individual career goals. I would think if you had a master's, you probably wouldn't need a graduate degree, unless you specifically ended up pivoting into something in general management, or you were struggling to find job opportunities. Then maybe an MBA is a good way to open more doors. But I wouldn't give you a blanket, I think it's a good or bad thing for you to pursue. I would probably lean no, given the educational background you will have after you finish your master's.
Awesome, thanks. And then just kind of like a tiny follow up, if you have a moment.
Sure.
I understand that there's the whole like target versus school. My undergrad was at William and Mary, like not really a target school, but then pursuing this graduate degree at Georgetown. I understand their undergraduate school is a huge target school, and they're all over Wall Street. But I was wondering, do banks look at graduates versus undergraduates in a different light for target target designation? Sorry.
No, I for the most part they're generally correlated, right? Like a semi-target school is going to have probably a target graduate program, like for the most part, right? Like I don't think that. By the way, I've seen plenty of people with your undergraduate degree in banking, so it's definitely doable. I also had a non-target undergraduate degree, and a lot of that is just like the incremental effort we need to do to find networking opportunities. But at the same time, people from our undergrads are more receptive to responding to us because there's less of us, right? So I don't think they necessarily look at them differently. Like a target is a target's enough. Usually they're correlated, but I think once you're getting your master's degree, I think the education is relatively comparable, just given what you're doing. I don't know. I don't feel like I gave you a phenomenal answer there. So in summary, yes, they probably bifurcate it, but I think for the most part, target undergrad has a target post-grad degree.
That's great. Thank you so much, Joseph. I appreciate it.
Yeah. Okay, with that, I will probably sign off. Again, if anyone wants to chat individually, feel free to just schedule an intro with my account. You can do a free intro. And if coaching is right for you, we can schedule a coaching time. I can also do, for a lot of people, I just do like instead of billing you for a full hour, I'll bill you for 30 minutes and we'll do what I call the baseline mock interview. And I'll grill you on all of the core topics, technical topics and behaviorals in a series of difficulties. And then I'll give you feedback based on where I think you are and how much effort you need to put in to bring yourself up to interview standards. So for a lot of people, if they don't want to commit to coaching for long-term because it's expensive, that's a sort of budget way to get a sense of where you stand and how much time you need to put into it. So thanks everyone for joining. It's been a pleasure to answer as many questions as I could. Have a good rest of the week and a great weekend.
Thank you.